What's up, everybody? So I go by the name of PE ratio. PE ratio is short for price earnings ratio, or some may call it price earnings multiple. This is the price of the stock divided by the the earnings per share. So the price of the stock. So if the stock is traded at $100 a share, you would take $100, and then you would take that'll be in the numerator, and in the denominator you will have the earnings per share (EPS). And I'll show you how to find this. You can find this in Yahoo um, Finance, which I may show that today. So I've been in the stock market for 10 years. I experienced the ups and downs. I study under. I have a certified financial planner. That's the first time I uh, started investing about 10 years ago. Bought about 40 shares of Apple, which now turned into 160 shares with the stock splits. I studied under him, and then I studied under a couple of doctors in finance, and I took their courses, spent over $20,000 in courses trying to learn this, and I had my own experience um, learning the stock market. I am not a fiduciary, but I feel like I am qualified to teach this. Again, this is not investment advice. This is educational purposes to help you all understand the stock market. I will advise every one of you to seek out a certified financial planner, and I probably could help you with that, give you some tips on that. Also, or a certified financial advisor. Two different things. I'll probably have to break that down into another slide. I'm always recommend that because there's taxes involved with capital gains tax that they understand. Certified financial planners. They also um, their goal is to look at your financial life and see what you need. I carved out a niche, which is the stock market, and that's what I know. But they have other vehicles they can put you in, such as cash value life insurance, where you get tax breaks, um, index funds, all type of stuff that certified financial planners can do for you. But my job is to educate you before you go to them. So today we're going to talk about one little tip that helps me out when I'm buying stocks. Somebody asked me, "How do you know when to get in the stock?" And I was like, "Well, I use after I after I analyze the stock, find out if the stock is making money, um, find out if the company is handling debt well. I use this one little trick. It's not just one thing, but this one thing that helps me, and I'll share it with you. Let me share my screen. It's called the Relative Strength Index. Relative Strength Index, the RSI. Let's see. Okay. And I'm outside, so it's a beautiful night. You may hear cars driving by, which ain't many, but that's all right. So what you're looking at here is barchart.com, www.barchart.com. I use this as long as I use a lot of different financial resources, but that I won't advise y'all to. I'm just in it so deep. I use this. I use Seeking Alpha. Um, it's just I got Motley Fools sending me stock tips, but I already know how to analyze the stock market. So when they send it, I don't just go off of their word. I'm analyzing the stocks that they give me as well because I understand how to analyze stocks. You all will get there. So I want to take you to something called the relative strength index. Let's see if they have it here. One second. One second. If you look at all this stuff, the fundamentals, I'll have to cover that in another section. But market capitalization, um, yeah, I'll have to cover this in another one because even right here, you will have to multiply this number by 1,000. That's what that K is there for, because they can't fit the whole number here. So I'll tell you about that later. Let me stop sharing and go to this for a second. One second. Let's see. So the stock I chose, I'm gonna choose Apple, something that you all know, Apple. And if you all can see, I typed in Apple in the search engine. Apple came up. It tells you what the price closed at, $192.25. It's post market, May 31st, 24. It tells you it's in the NASDAQ. So if y'all see me posting, I always tell you what the Dow Jones is up. The Dow Jones Industrial Average is up. The SPY, S&P 500, which is the SPY, and the NASDAQ 100. I'll tell you all about that. So Apple is in the NASDAQ, and some companies can be in the NASDAQ. They can be in all three indexes. So just let you know that. Again, we'll cover all this stuff later. Got to crawl before you walk. But I want to show you. So Apple, when do I want to get in at? Okay, so I will go somewhere like here. Oh man, I don't know if they let me do it. Okay, so Traders cheat sheet. Traders cheat sheet. So if you look down here, again, that's Traders cheat sheet. Tell you where I'm at right here. So there's something called the 14-day RSI, the relative strength index. Um, let's go. Oh, let me show you something real quick. So the this is the last price, $192.25. Okay. This 70% means that the stock is overbought. So right now is at Apple's at $192.25. If Apple reaches $194.40, then they say, okay, this means that the stock is overbought. It's priced too high. I'm going to wait to get into it. This is something I use. I need to use it more, but I use it often. So th- that means that that's a resistance level. Um, the stock is overbought. I wouldn't buy here. Let's keep it simple. So if you see 14-day, so 70% means overbought. 30% means it's oversold. So sometimes we have sell-offs in the stock market where, because everybody using these computers now and they setting stop limits, and a lot of times the price they set the stop limit at will be too low. So you got like hundreds of thousands of people setting their stop limits low, and when the stock, let's say the stock is at $192.25. Let's say people are setting their stop limits at $185. So imagine you got a million people doing this. So when the Apple hits $183, when it hits $185, it triggers a sell, a sell off. And if you got, there's something called the volume, VOLUME. When you have more buyers, when you got more sellers than buyers in the stock market in that particular day, the stock will fall. When you got more buyers than seller in that particular day, the stock will go up. And the stock market has circuit breakers, which means the stock market doesn't allow the stock to go to zero or way too down too far or up too fast in one day. Thank God for circuit breakers. Let's go to Investopedia. Um, what is a relative? So relative strength index, RSI indicator. Explain with formula. Okay, we ain't gonna get too deep in that. So it says, what is a relative strength index, RSI? The relative strength index, RSI, is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of securities' recent price changes to evaluate overvalued or undervalued conditions in the price of that security. The RSI is displayed as an oscillator, a line graph, on a scale of 0 to 100. The indicator was developed by J. Wallace Wilder Jr. and introduced in his seminal 1978 book, New Concepts in Technical Trading Systems. I had to read all this to you. Okay, so what does it mean? The RSI can do more than point to overbought and oversold securities. It can also indicate securities that may be primed for a trend reversal. Trend reversal meaning, um, I said if it's at the 70 mark, that means that it might be coming back down. And we use something called the resistance and the support line. So the 70 over means that 70% means is that a resistance? That means it never really broke there. It's been going up to that resistance level and coming back down. But if it's oversold, that's a support line, meaning that if it falls, it never really went past that support level. Um, so that's why people buy at that support level. That's why you hear when people say buy the dips, they don't they don't really explain that's what that means. Um, but you buy the dip when it's like oversold. Um, Sometimes the people don't mean to sell, but they got these stop limits in place, and when they go past the stop limit, it just gets sold. It happened to me before. I'm like, darn, I didn't want to sell that stock, but I probably should set my stop limit a little bit lower. We'll talk more about that later. Yes, you can set stop limits on your stock, so it won't go too far down. Okay, here we go. Um, so the RSI can do more than point to overbought and oversold securities. It can also indicate securities that may be primed for a trend reversal or corrective pullback in price. It can signal when to buy and sell. Traditionally, an RSI reading of 70 or above indicates an overbought situation. A reading of 30 or below indicates an oversold condition. Okay, they got the key takeaways here. We don't need this. Okay, the RSI provides technical traders with signals about bullish and bearish price momentum, and it is often plotted beneath the graph of an asset's price. Bullish means they they're optimistic about the stock. Bearish means they're not so optimistic, and they get these names from animals like the bull. The bull, how it attacks its prey. The bull attacks its prey by pulling his head, his horns down, and then hike you up, jolt you up in the air. Bull. Don't ask me how they got the. Don't ask me why. It is what it is. And the bear attacks you. It claws you down. So when you think about a bear, think about a down market. Claws you down. Bull jolts you up. Okay. An asset is usually considered overbought when RSI is above 70 and oversold when it was 30. Okay. The RSI line crossing below the overbought line or above oversold line is often seen by traders as a signal to buy or sell. And I'm not going to get too crazy about it. Here's the formula for that. For all these mathematicians out here, I still like math. So I might, want to solve this problem one day just to solve it. Uh, you don't have to do this. You don't. So the RSI step one equal 100. minus uh, the parentheses, square parentheses, 100 divided by 1 plus the average gain divided by average loss. That is the formula. And like I said, I might solve that later on just because I like doing that. So this is the relative strength index. Let's go back to Apple. So as you see here, 14-day RSI at 70%. The last price Apple closed at $192.25. Shows it right here also. So it's approaching overbought territory. So I wouldn't touch Apple right here. Well, I'm a holder anyway, so I want to. I'm long term. I've been holding Apple for almost 10 years, but I do trade options. So when I trade options, I look to, you know, uh, I look to buy and sell with options, but that's a whole other um, topic. And I look at this 14-day RSI at 30%. I say, hey, I may want to buy some more stock, buy some more Apple at this. If it hits 165, you know, it's oversold. And this tells you the legend is right here. Blue area is below the last price. Is the blue area below the last price will tend to provide support to limit the downward move. Okay, and rewind this stuff. You just got to get used to it. The red area is above the last price, which is up here, will tend to provide resistance to limit the upward move. That means it's limiting it. You don't want to buy. Blue area is above the last price. So this blue area was above the last price. Um, it will tend to provide support to confirm the upward move. Okay. And red areas below the last price will tend to provide resistance to confirm the downward move. And this is the relative strength index. When do I want to get in stocks? Hey, I would like to get in when the price of this stock is not so close to this 14-day RSI at 70%. Heck, I would like to get in, even if it was like 175, 178. I like that. Um, Even 184 is not bad, but I like to get in below that. I like to get in close to this 14-day RSI at 30%. Okay, so this is the relative strength index, and I hope this helps. You'll be hearing more from me. The name is PE ratio, price earnings ratio. This is the bottom line of a company. This is technical. This is some technical analysis, and I hope this helps you. Let's see. Let's get back. There we go. Until next time.